Good morning, everyone. Welcome to our Friday morning trading room. The end of another trading week. All right. Let's see here what we got going on this morning. This again with the NASDAQ. Take a look at the Eagle. And you can see yesterday, actually a fair amount of volatility throughout the day, where we had the market make a major decline out of the open, tried to rally up a little bit, another big move lower, and that was really the end of the day right there. Kind of went a little bit sideways after that. Pretty quiet through the overnight and the European session, but we are open with a little bit of a gap. A gap down here. So we have a little bit of a gap to the upside. Trade forecaster says we are in trend mode for 160 minutes. Wow. We'll see how that plays out. We're only a couple of minutes into the session here, so here we'll focus on the Raptor to start. We are getting some counter trend signals. Those are your number 2 signals. And we've already reached our target for those. We're here at the hard edge. I wonder if they're going to try to get into that gap. I wonder if I should try to fill it like that. Ooh, can't do that. Let's try it like this. All right. Let's see if they try to get into that gap here this morning. Ideally, you'd want to cover above the high. That's preferable for any counter trend trade. And we do have a taking advantage of that second push entry opportunity now. You always need to be careful around the hard edges, the hard edge of the trading band, because the market will make a reaction there. All right, let's close that out, put that on the shelf for the moment. Oh, they're trying to come right back now with another sell signal. Well, we've got ourselves a little bit of a twisted market here. We're getting conflicting signals. Here is our first in-sync eagle signal. So the eagle is looking to buy, and you'd probably cover it like that. The hawk is just a little bit messed up. The falcon trying to give us an early trend change signal. And I can see the raptor trying to fold over here again and try to give us a sell signal. So you could essentially bracket this market as well. If you want to use an OCO order, you could short below here. You could buy above here. And remember, when you're using your OCO orders, these orders are live as soon as you put them on your chart. So you can pull them away and then drag them into where you want them to be. Now, I haven't enabled my stops yet because I want to show you, someone asked the other day, when I use my OCO orders, I get my order, I get my break even, but I don't get my profit target and I don't get my stop loss. And that's because your stops are probably not enabled. Oops, that did it to me again. Stinkers. All right, here. Oh yeah, that's not what I wanted to do. That happened to me the last time. Okay, it's not really a glitch, but it's important that you have when you're using your OCO order, that you have your stops enabled. Because otherwise, it may do what you just saw. It may bring you in and take you out at the same time. Now, and I think that happened to me actually the other day when I tried to demonstrate that as well. All right, so I'm short. I'll cancel the Eagle trade. Not saying the market can't go up from here, just I'm already short. I'm just going to take one trade at a time. Really, like I said, conflicted, really balanced at this point. And 5850, that was an important number yesterday, so might see them bounce off of here. Okay, big push now. Come on, sellers, you got to make this one count. If they don't, things are going to get a little bit dicey. Oh, hey, I don't want to roll that just yet. Let's hold that stop. Maybe I should. Maybe I should just take the early stop out, but I'm going to try to give them every opportunity here. To let this trade work out. few notes here in my trading journal. Come on. So close to the break even. All right, here we go. I'm going to take it to break even this time. If it fails again, well, I'll take the stop out. Oh, come on, just a couple of ticks. Oh, you stinkers. Get down there. Oh, really? I can't believe it. They're so close. They're going to tag me at break even. Get away. All right, well, time will tell whether I was a little too quick on my stop. Or, thank you. Or whether that was a good call. We'll see what happens as they try to rally up here again. Well, could be a late filter entry building here in the Falcon. We'll see. We'll see whether we get any follow through from that. For you Raptor traders, I know there's a lot of new Raptor traders in the room, so I'll point out here that this could be an early trend change signal, an early cloud crossover. Cloud's not fully crossed yet, but we've got the clouds changing direction. We've got the pullback. If we come out of here with a sell signal, that could be an early cloud crossover. And here they go. Are they going to give it a try? Again, this whole 5850 area giving us a little bit of static, as might be anticipated. Oh, come on. Oh, there's the number one signal. So it just filled. I'm going to hit my sell market button, and I'll show you what's going on. Okay, so this signal, it's hard to see, I know, because we've got this dotted green line here, but this is the early cloud crossover signal. From here, the market should head lower, and we should produce a proper cloud crossover. For that reason, you probably want to be a little bit more conservative with your stops, because we need to anticipate that other pullback for the proper cloud crossover, if that makes sense. Yeah, Peter, maybe Peter's right. Peter says, hi, Eric. Does the OCO order work better when news is about to be issued? Yellen is talking at 10 a.m. Could this move the markets? Yes, it could move the markets anytime she has something to say. The market's already taking a little bit of a bearish posture, so I don't think they're expecting good news. I think the only reason that OCO hasn't been functioning right is because I haven't had the trail indicator enabled. I'll do, after this trade, I'll do another OCO trade. This time, I'll have my stops enabled. Just to make sure that's the fix. I guess technically we filled what there was in the way of an opening gap. Yeah, okay, good to know. Elmer says he had a similar OCO problem with his. He sent the files to Ben. Um, oh dear, I'm going to get tagged here in a second. I've had that problem off and on, and it does seem to be a little bit of a bug. Okay, now that we're out of this trade, let me set up an OCO, and I'll leave my stops enabled, and we'll see whether or not that makes a difference. So we'll do this a little bit tighter. Okay, so I'm going to toggle the OCO. I'm going to buy up here. I'll have to sell down here below my stops. Are they enabled? Yes, they are. Okay. Yeah. So that seems to solve the problem. And if you want to have a profit target in play, just make sure that your profit is set at 100%. That will give you a 20 tick profit objective as well, or whatever your profit target is. So it seems to ride on this enabled function. Make sure that your stops are turned on. Ooh, big rally. Just making a couple notes here in my journal. Okay, I think we can safely say we've got ourselves a little bit of a bullish trend going. So we'll look for a pullback and maybe another buying opportunity. Huh. That big rally up, and now they're kind of turning on their heels. Okay, so we're working a trend change signal now to the upside. So the clouds have crossed. Here's the pullback. We'll see whether they come back with a buy, whether they can muster a buy signal there. Here, the hawk giving us an earlier entry opportunity off this macro pullback. Again, you probably should try to cover it a little bit deeper, at least to start. And I wonder if we're gonna trend further. Come on. I'm gonna try to run this one out a little bit. See if we can't get above the highs. Okay, so you can see we're past our high probability profit objective. And it's probably time to put a more aggressive stop in play now. Okay, hooray for us. Quick little trade there. So here on the Raptor, about the same time I took that hawk trade, there was the Raptor signal. So here's yet another macro pullback and we're producing a couple late filter entry signals, a couple macro pullback signals. Usually you only see two macro pullbacks within a trend. Likewise for things like late filter entries. You don't want to see, a late filter entry followed by late filter entry. Again, you'll normally, unless the trend is especially strong, you'll normally only see one, maybe two within a trend. And then you'll get a reverse. And I wonder if that's what's happening now. We're going to see a push lower. We have seen a tiny little test of the extreme here on our Raptor. We do have a trend preceding, so I wonder if it's going to produce a sell signal here. That would be the number 2 signal to short. And there it is. There's the number 2 signal. I just popped in again with a market order. Hard edge, the target for this trade. I really should reset my parameters. I didn't mean to short this with 2 contracts. Let's see if they're just going to slip a little bit lower. The next bar lower, I'm going to go with something a lot more aggressive. Maybe my bar high-low strategy. If I get another bar lower. It's a good suggestion, David. David says it would be great if Indicator Warehouse could add to the Trade Manager an OCO order like it does for regular trading. Punch one button for an average and price, and sorry, for an average price, and buy is installed, say 15 ticks above, and the sell 15 ticks below. It places it, move it if you like, hit submit, and in play. I'll leave it to you to send Adam an email on that. Honestly, that type of thing means a lot more coming from you guys than it does from me. You know, you can also do something similar just by right-clicking on your chart, picking an order, and then bringing it up where you would like it to be. I know it's not quite the same as what you're suggesting, but there you have it. All right, I'm going to enable my stops. I'm going to go now with the very aggressive bar high low, and I might even slip this one to break even. There we go. Okay, so they're either going to go at this point or they're going to tag me out, and they just tagged me out again. And I'll admit I was very quick with my stops there. I'm a little bit concerned about a possible hard edge bounce. The market paying off a little bit better to the long side this morning. Than the short side. Oh, yes, I know, David says, yes, but that's 4 clicks to do all that. And you're right. But like I said, Adam does appreciate hearing suggestions and what you might need. And then, of course, he'll do his best to give it to you. Oh, we're in the hard edge where Geiger counter is kind of leaning a little bit to the short side. I don't know if I want to try to short from the hard edge again. I may be better off just staying with the buy side, just looking for a buying opportunity. The mixed signals here, the hawk giving us a first micro macro cross lower, trend change signal already here in the falcon, the eagle, but the eagle in the hard edge still bullish. Ditto for the raptor back here in the hard edge, looking for a bounce and a possible buy. And there it is. And I'm going to have to hit my buy market button again to get me in on that. And I'm going to have to change this, go to manual mode to make sure I only get in with a single contract. Things moving rather briskly here this morning. Let's see if we get any follow through. Yeah, they're a little uncertain about their direction here this morning. They're trying. I'm looking for another uptick here. Struggling a little bit maybe off of these lows. I don't remember. I don't think 58.50 was a big number for us yesterday. 50, sorry, did I say 58.50? I meant 58.58. Come on, buyers. uh, Still looking for that reaction to the hard edge. I think it's important to remember that whenever you encounter the hard edge, you should anticipate a reaction. Okay, so we got a little bit of a pushback. This now the reaction to the hard edge. You could see this as a number 3 signal. This would be one of those what we would call an advanced signal. It's not printing. Because the clouds are not in the same direction. Remember, your number 3 signal is a continuation signal. And because your fast cloud has dipped a little bit here, it's kind of spoiled the number 3, but it is still an early number 3, if you will. All right, well, they're making a pushback here. very often, uh, the buyers will allow the sellers to push against them twice before the buyers start to rally the market again. I don't know if that's to try to catch some early stops or if it's just the nature of the market, but that does tend to happen. We'll see whether we get some buying pushback now. If I can get another bar here in my favor, I think I'll start to bring my stops up. There we go. Darn it. All right, well, I'll leave it a few ticks below the low. If the buyers fail at this point, well, they're probably going to tag me out anyhow. All right, if you excuse me just a moment, I'm going to be right back. What did I miss? Oh, not much. Still holding this low, this now the second pushback, so the buyers have got to get pretty serious about rallying the market at this point. So we need to take out this whole 58, 63, 64 area. Oh, come on. Well, they're thinking about it. I hate it when the market gets this balanced. It gets really difficult to make a call which way it's going to go. The only good thing is I can pretty much say if it breaks these lows, I am on the wrong side of the trade. So once more, I need to see those buyers show up. Excuse me again for just a moment. I will be right back. Hi, sorry about that. I'm trying to multitask. I'm not a good multitasker. All right, here come the buyers. Steve, yes, Steve makes the comment. No really nice signals today. Maybe only the buy at 951. This time yesterday we had 5 signals. That's the way it goes sometimes. You know, if you have a good trading day, you're probably going to be followed by a more convoluted and choppy day the next. Peters asked, Eric, is there a way to print more yellow bars indicating a neutral market, maybe a lower bar size? What you'll want to do is you'll want to go to your indicator and to your Hawk, your Raptor filter, and you can change your Hawk brick size. That will introduce more yellow bars, a smaller brick size here. Yeah, Jeff says we need to get through the top trend line. I think you're right, Jeff. I think there's been some active selling here. And as we encounter the trend line again, there will be a little bit more selling still. And hopefully this push, we're getting the higher swing, the reaction here off of the primary resistance line. And maybe we'll get a little follow through this time. Peter says, I once read, do not trade on Friday. Make your Monday through Thursday, golf on Friday, family on weekends. It does kind of make sense today. Fridays are funny days. It seems if we're going to get a move on Friday, it's going to be very early. Because I think you're right. I think traders are anxious, as anxious to get into the weekend as anybody. So, you know, they make a push, an early push up, and after that, we're just kind of blah. Yeah, Peter says I wrote that down as a trading rule. It's a good rule to have. So many traders have. I don't know why I'm focusing on this so much this week. I suppose I've heard about it more this week than other weeks. But the FOMO, the fear of missing out, and that plagues traders. And it shouldn't. You should never feel anxious to take a trade. If the market moves without you, big deal. You should have the mentality that there's always another opportunity. Yeah, you might have missed a huge move in the market, but who cares? You'll just pick up a couple of smaller trades. We're always going to miss moves. And if you happen to stand aside on a Friday, like Peter's suggestion, and the market makes a monster move, well, that's okay. You'll be back Monday, and the market will still be there. Like I said, we're going to miss moves. It's just the nature of the business. We'll hang in here for a few more minutes. I think I'm going to get tagged. Buyers not really all that interested in buying the market up. Or if they are, they haven't committed to it. I do believe they owe me one more rally. I'm hoping that this little sideways downtrend actually turns out to be a rather large bull flag and that we get a rally out of here. But I'm prepared to concede if we trade below these lows. I'm prepared to say, nope, I was wrong. And if they don't smarten up here in a minute, we'll just close down the trading room for the day. And go do something else. Enjoy the nice weather while we have it. No, get away from there. All right, well, enough of that. They're just not in a cooperative mood. So I think we might call it a day as well. Unless anybody has any objections or any questions, I think we can just kind of anticipate the market to keep churning a little bit here. As they try to settle in to a direction. All right. Well, there they go. They're getting a lot stronger now to the short side. I think we're back near the lows of the morning. No, not quite. 58.45, the lows, and we're just above that. So the buyers were a little reluctant, and now the sellers are taking their turn. Ooh, big move. Back down to the low of the day. Actually, I'm just taking a look here at some of my results, and you know what, Peter? I think Fridays, on average, tend to be my worst trading days. Rick asks, is there anything that could be done to see this kind of trend in advance, or am I asking the wrong question? I don't think you're asking the wrong question, Rick. It's, these things, they seem to sneak up on you, but of course, when you see them in hindsight, they look a little clearer to you. In hindsight, I can tell you, the market cycle, and this market cycle goes over and over. It doesn't matter whether you're looking at a 5-minute chart or a mean Renko chart or a daily chart or a weekly chart. It just doesn't matter. The market goes through this kind of cycle where it's hold on. Where there's a quiet period, a sideways period. The market will break out and advance, then there's another quiet sideways period, and then the market will decline. And this happens over and over again. Now, of course, these legs are not always equal size. This duration is not always equal. This is known as the accumulation phase. This is known as the markup phase. This is known as the distribution phase. And then this is known as the markdown phase. So if we take a look at our chart in hindsight, we can see we had, this morning we had the mark up, then we had this long distribution phase, and then now we're seeing the mark down. So, like I said, this happens time and again. So I suppose to answer your question, whenever the market is sideways and congested and quiet, you can anticipate a breakout. Now, unfortunately, I can't always tell you which way it's going to break. You can see here the Raptor did produce a #1 sell signal when the breakout finally occurred, but I guess I was a little bit too anxious with these earlier signals because we weren't in enough of a distribution phase. The market can only do one of two things. and it cycles back and forth between these time and again. The market can either trend or it can be non-trending. There is no in between. And it's easy to forget this. I forget this as well. So, don't think that this is something that comes naturally. We're always focused on the last 3 bars, it seems, the last 3, 4, 5 bars that are printing, and we tend to ignore everything to the left of us. So I think, when you look at your chart or when you're trying to plan a trade, I think if you can step back and you can say, is the market trending or is it non-trending? If you can answer that question alone, you'll probably keep yourself on the right side of the market. Now that we have a market that is trending, it's obviously trending, we can be looking for opportunities to get in, probably to the short side, because that's the trend. When the market is non-trending, it's not that there won't be opportunities, but maybe we need to manage the trades a little differently. Maybe we need to, if we determine this market is non-trending, maybe we need to be looking for little buy signals that originate off of the lows. Look for little scalp opportunities. Look for sell signals that develop off the highs or near the highs. Because when you're in a sideways range, you can roughly divide the market into quarters or thirds. Well, here we'll do thirds. Where buying will originate in the bottom third. If prices fall into this bottom third, you're going to get all the buyers interested. If the market rallies into the top third, you're going to interest all the sellers. The middle is no man's land, and that's why you see the market breaking up so much. So, to anticipate the big move, I think you got to step back. You got to take the bigger picture into mind and just kind of step back and take a look at the chart and say, what's really going on here? And again, this is always easier to see in hindsight. You can actually see the market topping out, can't you? It makes a swing here, makes a high here, and all of a sudden it can't recover the highs, and we're starting to swing lower and lower, and then finally it lets go. I always marveled at the way Ed Sequoia traded. If you haven't heard the name, he's worth looking into. He's an interesting fellow. He's a very successful trader. And I read that what he would do is he would print off a chart, tape it to the wall of his office, and then go stand at the other side of his office and look at the chart. That's the kind of perspective he wanted. He didn't want to focus on, these bars here, which is what we so often do. And I think I've shared this with you before, where how many times I will see somebody's chart and their chart will be like this. Literally like this. They'll stack, their different markets. They'll have their NASDAQ and their E-mini and gold and crude and whatever. They'll cram in as many charts as they can. And this is what they're looking at. How can you make a trading decision looking at a chart like this? I try to stretch mine out so that at least I can see something here to the left, and I'm starting to think that maybe I should even be squishing this up a little bit so I get even a broader view of the market. Because like I said, when you look at this chart in hindsight, it seems kind of obvious, doesn't it? And even if I roll it back before this major decline, it doesn't look very bullish at this point, does it? Every swing high is lower. Every swing low, or almost every swing low, this is the exception, but every swing low is lower. And then, boom, down she goes. So maybe that's the lesson to take out of this is step back, try to analyze what's been going on, because the market doesn't do these things spontaneously. The market had been building up for this sell, well, since the open, really, or 20 minutes after the open. The sellers started getting ready to short. The sellers were loading up to the short side. And then all of a sudden, they just took the buyers to the edge and bink, down they go. So I'm glad you asked that, Rick. That's a very good question. And as you can see, it can fool any of us. Another good question here from Rick. Rick says, market was down 30% overall yesterday. I heard last night. I was thinking rebound today, maybe next week. The Gulf Coast hurricane had affected the downtrend. I heard, listening to how you trade in these conditions using 2.0. Thanks for your help. Okay, here's the thing with news. Don't follow the news. And if you're going to follow the news, follow it with a huge grain of salt. News people see the world through a news filter. So what I mean is everything is cause and effect for them. Prices fell off sharply. The news person is scrambling. All the reporters at MSNBC are scrambling right now, trying to put a reason to this decline. Oh, Janet Yellen had heartburn. Boom, down goes the market. Or I don't know, maybe that would cause the market to rally. I don't know. But they'll always try to find a reason for what the market does. I'm going to let you in on a little secret. The market does what it does because there is more selling or there is more buying. People buy when they think there's good value. And we're not talking onesie-twosie players. We're not talking guys like you and I. We're talking Goldman Sachs. We're talking Bank of America. We're talking Bank of Canada. We're talking huge, huge investment companies. They see an opportunity. They see stuff that we will never have information to. And they gauge that, all right, the NASDAQ looks like a good buy. Let's buy the NASDAQ. And again, you know, there's kind of this period, this quiet period of accumulation through here. We know it's accumulation because prices went up after this sideways stagnant period. And so prices rally. After that, they're looking at their positions and they're saying, no, given whatever the current market conditions are, I think we'd better liquidate some of our position. And this makes sense as well. You know, if you're place yourself in the position of you're trading Bank of America for Bank of America, right? You bought down here, and I don't know what you bought. Let's say you worked yourself in through this downtrend here, and now you're long 10,000 contracts on the NASDAQ or the E-mini or whatever, because they all do the same thing. Where are your stops? Well, I guarantee you your stops are not right there. Your stops are probably back a couple of days at least. Let me make this a little easier to see. Okay, so your stops are back at least a couple of days below the low. So you're running a huge risk position. The market rallies. Not only do you have open profit now, but you've got this much more at risk, right? You've essentially doubled your risk. You've got a huge risk position now. What's the easiest way for you to reduce your risk? Well, you're going to reduce your position size. So you're going to start selling. You're going to start selling, and some of that sell-off affects the market here. You're going to start selling more of your position here. You're going to start selling off more of your position here. And now you're looking at the charts or the market info. Somebody comes and taps you on the shoulder and says, hey, Rick, market conditions have changed. They want us to get short. Okay, so now you got to get out of all your position and you got to start loading up on the short side. So you're selling all through here. Every uptick that you can buy or that people are buying, you're shorting. And then once you come through this, then of course the market heads lower. Well, now you have the same problem in reverse. This is why pullbacks happen. Because if you were one of these traders that loaded up here, your risk position is at least above the high of the day. Well, you've got all this open profit and you have all this as risk, right? So you need to reduce your risk position. And rather than jam your stops in ultra tight, as we tend to do, they will reduce their holdings. And that will cause the market to bounce a little bit. But be careful when you're listening to the news, because like I said, the news people, they'll attribute this to something. They'll blame it on the hurricane, they'll blame it on crude oil, they'll blame it on who knows what. But the fact of the matter is, there's more selling than there is buying. And whether their reason is correct or not, it doesn't really matter, I suppose. But it's tough to get caught up in that news idea that I need to know why the market is going up. Now, fundamental data is different. If you're trading like crude oil, or if you're trading soybeans or corn, coffee, sugar, these are all fundamentally driven markets. So if you're trading soybeans, for instance, you want to know what the South American soybean harvest is. You want to know what the North American soybean harvest is. If you're trading coffee, you want to know what the Robusta coffee harvest is. You need to know these things, because then you can step back and you can say, okay, we've got so much left over in last year's inventory. It looks like we've got a bumper crop this year. I think prices are going to go down. And so you will look for shorting opportunities, or vice versa. You know, it was a poor harvest. Holding inventories are low. I think prices are going to go up. That's different than following the news. And it's very, very tempting to think that because we've had a rally day one day, that the next day it has to recover. Nope, it doesn't. And very often it will, but it doesn't need to do that. So try not to come into the market with a bias on the day. I know it's difficult to do. I've done it myself. And those tend to turn out to be my worst trading days. Yeah, see, like Rick says, yeah, the oil companies removed all the personnel off the oil rigs in the Gulf due to the storm. And will that lead to a spike in crude oil? Probably not. Lots of crude. It will, if you're trading gas, it will lead to a spike in gasoline prices, because there's a lot of refineries down there and they will be shutting down because of the storm. So you can anticipate higher prices at the pumps, but you may as well buy gasoline futures. Make a little bit of money on that. All right, boys and girls. I'm going to button up shop here. If you are going to hang out for the afternoon, wait for a little bit of a pullback here, or you can even try to buy the pullback, but look to short. We will get a bounce, but the trend is definitely down. So try not to get too greedy on the long side. Have yourselves a wonderful weekend. I will see you again on Monday. Talk to you then. Bye for now.